Hey, what is up, everyone? It's Blockchain Wayne doing another round the block. I do this every Thursday, 7 p.m. Central Time, just to talk about cryptocurrency, blockchain, see if anyone has any questions. Hadn't really had anybody send me any questions. So I'm just going to talk a little bit about cryptocurrency, about risk. I really want to dive deep into risk today and talk about risk, how you can mitigate risk, but also, let's face it, we can't avoid risk in life. Those that play it safe usually never accomplish anything great. So that's why it's important to understand risk and understand the difference between calculated risk and just, extreme risk where, you don't really research what the risk is, what you should be getting into. And some people will take that risk based off of the advices of others, based off of what other people say they should do. And really, you have to take responsibility for whatever risk you take. So it's important you understand the risk. And why am I talking about that with cryptocurrency and blockchain? Is because most people jump into crypto. I got into crypto initially to make money, wanted to invest in something that was going to make money. And, that initial, when I first got in, it's quite a bit more than what it was then. But at the same time, when you truly understand how this works, that's why I realized that the risk is the fact that we're early, it's volatile, and later on when there's less risk, it'll be less volatility, but there'll also be less chance to benefit financially. I tell everybody I talk to about cryptocurrency, I say in 5 to 10 years, everybody's going to be using it. Some people may not even realize that they're using it. The question is, are you going to benefit from it by getting in early, or are you going to wait? Now, so many people would jump into this with bad decisions, jump in at the wrong time. And sometimes not necessarily, it's hard to time a market, but sometimes they'll jump in a market. And then when they see prices start going down, they want to get out. And that's where people lose money versus, obviously trading and learning how to trade the markets and trade these swings is what's important. So I'm going to share some tools later on in this broadcast. I'm only doing it probably about 15 minutes, if I even go that long today. Got a lot going on right now, but I'm going to share some tools that I utilize that you can use to increase your knowledge and become better at trading. But it's important to understand that not everybody can trade. So now I also have people on the other extreme that are traders that say that people that hold are always the ones that lose money. What does that mean? Whenever you hold an asset, when the value goes down, the value goes down. Now, you don't really realize that loss until you take it, till you sell it. But yeah, obviously it's easier to sell when the market's high and buy back down when the market's lower. And that's in any market, stock, Forex, anything else. But sometimes you don't time it right. Sometimes you're still learning the market. But it's important to make sure you're in an asset that's going to be really appreciating over time in terms of value, in terms of scarcity, in terms of use. And what I see happening with cryptocurrency and blockchain, forget about what the price says today versus the US dollar for anything, right? Is the use case increasing? Absolutely. Are more and more financial not financial institutions, let's say, are more and more big companies, big institutions, or more and more diving, not just dipping their toe in, but diving into cryptocurrency and blockchain? Yeah, I mean, there's multiple companies recently that announced that a big portion of their holdings are being put into Bitcoin and other assets. Tim Draper, who's a big Bitcoin bull, has also said that he's also diversified across several assets. Now, diversification without any research can be bad because some projects may go up and down and never go back up again because they don't have any really long-term project, no long-term solution, nothing really unique about it that's going to drive adoption or use case. And that's what it's going to take in the long run. And, basically, looking at it right now, we're similar to the early days. I compared, if you want to look at the last quote unquote bubble. Most people think bubbles are a bad thing, but a bubble is not really that bad because what emerges from that is good technology. And we've seen that happen with the .com is the one I use the most to explain it to people. When you think about the .com bubble, every company under the sun was throwing .com on their name, and they were seeing, if they were publicly traded, they saw their stock prices go up. So from an investment standpoint, people were seeing these companies get gains as far as investing in their stock just because they were a .com company. What happened? .com bubble burst. A lot of those companies weren't doing anything unique, and those values crashed. Now, what happened to the legitimate projects? Your Amazons, your Apples in those early days, they crashed as well. Amazon lost 90% of its value. It went from over $100 to $10, and some people sold at that point. Now, what emerged is they continued to focus on growing, developing, expanding their business model, and that's where they are today. Why do I compare that to crypto? Because from an investment standpoint, crypto has so much more use case, Bitcoin and so many others. It's going to be so much implementation and use case that it's going to be bigger than some of these companies right now that are trading in terms of value, right? I mean, I know it's two completely different animals. We're talking about stocks versus cryptocurrency, but let's face it, most people will put money into cryptocurrency looking to make money and investment. And the whole goal now for me is that the purchasing power, whenever it's time to cash out or utilize or spend that cryptocurrency, one, I won't have to because it'll be enough adoption to where I can spend it wherever. And the purchasing power of it then in the future will be way more than what it is now. So that's why it's important to understand this is a long-term game. And without risk, you don't really gain anything. There's always risk in life. Nothing's a sure thing. Now, if you're a football fan and you watch what happened to Atlanta the other night, they had over a 20-point lead over the Cowboys. And statistically, no team in the history of the NFL had, at the point of the game they were in, no team in the NFL had lost after being up by that amount. And so it's almost a sure thing. And there was somebody that did some in-game betting on one of the in-game betting platforms where he bet $35,000 on the Falcons. Now, to him, there was very little risk. And if the Falcons still won, then he would only win an extra $1,000, but he was risking 35. But there's still risk. It's not a guaranteed win. But what happened? The Falcons ended up losing that game by 1 point, and he lost $35,000. Now, that was a gamble, right? But he was gambling. It was a calculated risk, and he lost. Now, in whether you're investing in stock, Forex, cryptocurrencies, whatever, understanding what the risk is and realizing there's always going to be, if it can go up, it can also go down. And it's the same thing with the stock market right now. But what I see is you need to start educating yourself on cryptocurrency and blockchain. If you don't already know about it, start looking at resources. There's so much you can do to learn about it. And then as you learn about it, you're going to see more and more the reason why it's important. Why do I do this every week? Because I think it's important for people to understand it. Whether you choose to get involved or not, that's fine. Like I said, in 5 to 10 years, everybody's going to be using cryptocurrency. What are those going to look like? What it's going to look like? Most people don't know. We're used to a world where we live in a country, we have one currency. You go to another country, they have another currency. Well, this cryptocurrency, Bitcoin and others are borderless, right? It doesn't matter where you are. There's going to be no borders when it comes to money and no exchanges where you have to go, okay, I'm going from this country to that country. I got to go from this to that. No, I'm going to pay in this cryptocurrency here, here, here. If I want to pay someone in the Philippines for work, I can send them payment instantly, and I don't have to worry about them, paying a currency exchange somewhere there just to convert my dollar to their Philippine peso or whatever country you're going to. That's the true nature of cryptocurrency. It gives you that freedom because right now that system that we use to transact is controlled by banks. It's controlled by financial institutions. And those are just vampire institutions because all they really do is they leech on and they just suck a little bit out of each transaction and basically charge you for something that could be easily peer-to-peer. We've got better technology. And also through this, we're starting to see new things develop, such as, and new relative to the old system, but we've got smart contracts that allow you to create decentralized finance tools that can rival centralized finance. So, allows you to have more control and also give more access to people. Now, those of us that maybe, I can go to the bank today and I can get a loan if I need to either buy a home or I need money for a business or whatever. If I can present that I'm capable enough, I can get a loan. Most people can't. Most people in the world, when I say most people, it's because there's almost 7.8 billion people in the world. There's only about 2 billion that have access to these financial institutions. But imagine when everybody has access to it. And that's when use case is going to go up, demand's going to go up, and most cryptocurrencies that are going to catch on, they all have a limited supply, whether that's Bitcoin, which is 21 million, or whether that's some that have a slow inflationary amount set to go up every year. kind of like Tezos does, there's still going to be a set amount, and you can't just hit the print button whenever we need more. What's good about that is that's going to stop those that are saving from the value depreciating. What's happening to people right now is they're putting money in the bank, they're saving money in a bank, US dollars or whatever country you're in, and that country, doesn't matter which one it is right now, they're printing and printing more currency, right? They're trying to keep this economy afloat, even though they've shut most of it down because of this pandemic. And what's going to happen in the end, we're going to see prices go up. Prices are going to continue to go up. And we're just going to think, oh, it's because of the pandemic. No, it's because of the reckless printing that's been happening. I just had it show up on my timeline from a few days ago that actually, September of last year was when the Fed started to infuse money to banks over in overnight lending called repo loans, and just started printing billions and hundreds of billions of dollars that was being put out, drastically increasing the Fed's balance sheet. So that was before anybody knew anything about a coronavirus or whatever. So they can blame it on this pandemic, but it has nothing to do with that. So that's why it's important to look for an alternative system, because the systems of finance have not evolved over time. They become more about surveillance and control, and they're not very inclusive. They're more oppressive than anything. You want to talk about oppression? That's what the current system does, because it's only designed for a select few people to be able to participate. Whereas when cryptocurrency, it doesn't discriminate. It doesn't matter where you are, right? There's a decentralized exchange called Uniswap where you can buy cryptocurrency, you can sell cryptocurrency. You don't need credentials. You don't need to prove who you are. You just need to connect the wallet to it, and you can trade. You can buy, you can sell, you can trade on there. And then whenever they decided to reward their users, when they created a token, they just airdropped it to everybody that had used their platform. And it doesn't matter who you are. That is true control, because it doesn't matter if you're here in the US or you've got, a cheap Nokia phone living in a village, say in Africa or India. Everybody got access to that, which has a value of over $2,000 now, right? And for us in the US, that's a decent amount. But imagine in countries where they may only make a couple $100s a month. So that's where it gives universal access to everybody. So it's important you understand that, but understand the risk you're getting in. It may go down before it goes up. And it's better to sell it when it's higher and buy it back when it's lower. But sometimes as you're learning in your knowledge, just like my history, you think you may know what the market's going to do, and it does the opposite. Or you're scared that you're going to either sell and it's going to keep going up after you sell, or you're going to buy and it's going to keep dropping after you buy because you didn't quite buy at the bottom. So that's why sometimes dollar cost average can work, but you have to really understand what you're getting into. Dollar cost average in the wrong projects is going to be a disaster to kill you in the long run. So it's best to learn how to trade the markets. So what I want to do, I'm going to share basically some tools that I use for trading. And actually I made some videos for this company and just got added on. So now I'm a brand ambassador for them, which means I help them promote their business, whether I create training videos to show people how to use it, or whatever the case may be. I can show you what they have, and this is it right here. So this is News Crypto. They have a small school section, which a lot of the school and tutorials are free. I'm kind of partial to the tutorials because I created most of them. They have a token tied to their platform, but they also have tools for beginners, tools that allow you to look at news, look at charts, learn about DeFi. There's even, let me find it, a trading simulator. And this is really cool because many times we'll jump into trading, and if you don't understand how to trade, you'll just jump in and you'll end up, you're basically just gambling until you understand how to read markets. Now, when you start to look at some of these markets long enough, you realize so many different patterns repeat. So looking back at history to try to identify what may happen and learning different indicators, you can practice what you see on here. You can look at other people's predictions here to see what they think might happen on the market. And the whole point of predictions is not to say the market's definitely going to do this or going to do that. It's usually a set of, if this happens, we may go here. If that happens, we may go here. You're trying to mitigate your risk on where you may think it'll go. What this allows you to do is they typically will give you an equity amount, which this is not, it's not real money. It's a trading simulator, just like a flight simulator. When people are learning how to fly, they don't just get in a plane and go up in the air. And you can practice buying and selling different assets, and all the pairs are here. You can pick what you want to buy, whether you want to buy Bitcoin or anything else. And then you can buy it, you can sell it to see if you can grow that amount of equity, and also learn from your mistakes. Hey, if I bought here, right, and then it dropped here, then what did I do wrong? What did I miss? And sometimes it's not anything, because you're not always going to be 100% right, but trying to learn, what those mistakes are, trying to learn what it is before you start risking a decent amount of money. And even then, when you really start to do actual trading, it can be kind of difficult, because now you've got money involved, and a lot of people tie that to emotion. But developing a strategy and learning that strategy, okay, if this happens, I'm going to do that. If that happens, I'm going to do this, and sticking to it, even when, your emotions may be telling you something different. So there's so many different tools they have in here. They have news, where you can look up news about different projects. Now, news impacts price, whether it's up or down. Depending on the news, it could be a temporary price adjustment, or it could be, something that continues to go up after. But usually when you have big moves, you typically will see a correction. And then they have a watch list, token summary, coin calendar, what's happening with different projects. When certain projects are having certain things on the calendar or certain releases, then you may see, you'll probably see something where you may see a price impact, whether it's up or down. Airdrops, just different things you can learn, which cryptocurrencies you can stake. So those of you that say, I don't want to learn how to trade, maybe I want to earn passively, they'll show you some of the cryptos that you can earn rewards for. You see Tezos, staking Tezos right now. And what staking means, it's you're committing a certain amount to the network that allows you the ability to either go to vote or delegate your vote on any changes to the network, but it also helps to secure the network. And from that, you earn a reward, a staking reward of new tokens that are released. With Tezos, it's about 5.5% right now. This does vary. Cosmos, it's 9.22%. Cardano, 6.9%. And you see different ones here. Now, obviously, the ones with the higher returns, like SNX, it's a very volatile one. So the reward may be higher, but that's really because the price is very volatile. So because you're not accumulating based on the US dollar value, you're accumulating based on how many tokens you have. So annually, about 43% of what you put in here. That's why the adjusted reward shows what it is based on the price changes. A lot of these markets have seen some adjustment, which is why you see where it is, where it's 0.43%. But 43%, if you're looking to hold this for a long term, that can be good. So the more volatile an asset, typically the more returns you'll see. But this is what you can get for staking these. And in News Crypto, if you want to learn how to stake them, you click on it, and there's a calculator where you can show how to do it. And then it basically tells you how to delegate it, how to bake it. Tezos call staking baking. And then you can see related assets to it, along with a link if you wanted to actually stake it. Now it shows you how you can stake it in certain wallets. And that's what staking is. It's a way to earn passive returns. If you're planning on holding for the long term, then that's something you want to do. Now, like I said, it's always best to learn how to trade the market, but everybody is at a different place, which is why they have tools for beginners, tools for intermediate, and tools for advanced. Intermediate, you get to arbitrage. Arbitrage is where there may be price differences from one exchange to another. For instance, Matic is, it's a 34% variance. These probably don't last long because most people learn how to trade them. In other words, you can buy it on Binance, you send it over the Bittrex, and you can sell it for more. So you want to make sure that there's no issues with the sending or receiving to those exchanges. Sometimes that can cause arbitrage, but that's what arbitrage is. And that's a little bit more advanced. People looking to trade, change. And then there's also other tools available to look at. Market sentiment, advanced. There's different things you can see as far as tools here. So without going into all of those, that's what's available. But all of these, there's a description about them. I've got a video that I created for each tool to show you how to utilize it, just because information is really the most important. You think about those traders back in the 80s and 90s before they really could rely on, typing in a website to get information. They would get the Wall Street Journal and they would just look at what's going on. They would look at different things, look at price action based on what's printed in a newspaper to see where their investments were going to go, what kind of buying or selling activity we're going to make. It's no different here because we're trading currencies, but you're really trading the future of those currencies. Most of the prices are speculative as each project starts to roll out more and more implementation, more and more features, upgrades, or as more, high profile, it becomes more mainstream when more people will accept cryptocurrency. More people will allow you to pay, or, whether that's through a retailer or to a supplier that you're doing business with, as that ecosystem adapts and evolves to where next thing you know, say I've got a business and I can pay my supplier with crypto, and then my supplier can pay his employees with crypto. And then those people go out and spend money at retailers with crypto. And those retailers can then pay their suppliers back with crypto. You've created an ecosystem. So it's going to take some time to adapt and evolve. And a lot of times right now, you're investing in the future of the volatility of what it may be. And I can tell you, most of these cryptocurrencies, there's thousands of them right now. Anybody can create one. I created one for work, and it really doesn't have much use outside of it's an employee reward system that they can redeem for, snacks and stuff. But anybody can create one. But there's going to be a handful of projects out of those thousands that are going to get a lot of implementation. They're going to be for different things. Not like this country is going to use this one, this country is going to use that one. Let's face it, governments, they thrive off of control right now, and they're trying to keep control and keep their thumb, on the ability to control people's actions and what people do. Cryptocurrency breaks away and gives you that freedom. With that freedom comes great responsibility, but it gives you that freedom to transact and interact without anybody having to give you permission. So it's true freedom, but each one can do something different. I tell people all the time, yeah, Bitcoin may be, slow compared to other networks that are faster when you're trying to send a transaction. But if I'm going to buy a candy bar, I'm not going to use the same cryptocurrency that I'm going to use when I'm, say, purchasing a piece of real estate where I'm paying, tens or hundreds of thousands of dollars for. I'm probably going to use Bitcoin for that in the future, versus if I'm going to buy a candy bar for $1, I may use something different. And we're starting to see wallets even evolve, cryptocurrency wallets, to where it's going to get smarter and smarter to where it's going to dictate which one you use based off of what kind of transaction you need, and do it all in the background. That's when I said people are going to be spending and using cryptocurrency and not even realizing they're using it, because all they're looking for is an exchange of value. And that's what we want. So, but by investing early, you have the potential to have more gains. It's also, you have the potential to have more loss, but that's why education is important. So I share this every time. I'm going to share a link to News Crypto. You can create a free account. You can play around. They do have paid accounts where you pay monthly. You can either pay monthly in their crypto, or you can buy some of their crypto and stake it. And if you stake some of their crypto a certain amount, you get a free 1 year you get a 1 year membership with that. But at the end of the 1 year, you can pull that crypto back out if you commit to staking it. So that's News Crypto. We also have Blockchain Training Academy. If you want to dive deeper and learn more about the history of cryptocurrency, the history of money, what different project researches that we have out there. That's what Blockchain Training Academy has. And that's just 2 tools. The reason I've aligned myself with those projects is because we're focused on educating people. And the educated ones are going to be the ones that win. You're going to hear about all these people that put in a few dollars and made thousands, or put in a few thousand and made millions, but they're the exception rather than the norm if all they did was just take a guess and threw money into a project. Because a lot of these projects may go up and down, and they're not going to go back up after. So, but really that's it. I'm going to end that here. That's it for this episode of Around the Block. Thanks for watching. If you're watching this live, appreciate you hopping on. If you're watching the recording, thanks for checking it out. If you still got questions or want to know something, type them in the comments. Let me know what you see, or if there's something you want to learn about, or if you have questions. We all hear things. I know early on in crypto, when I first got involved in Bitcoin, I was calling a few friends that got involved around the same time, and we were just trying to figure it out. And we realized it's hard to figure it out. But now there's resources. You can reach out, ask your questions, be glad to answer them. Some people have even set up calls with me afterwards just to kind of talk or go over some things, just to go over the basics. So, but that's it for tonight. Everyone have a great rest of your day, and I'll see y'all next week.